Paul, there are a number of fundamental factors at play on the demand side. On the supply side, we have the strong dollar, of course, recession fears, everything that's going on with the Russian oil supply. Goldman Sachs, though, still saying they believe that the sell-off has been overdone. What do you think? How do you weigh all of these factors against each other, where we are for oil prices now, and what you think we're going to see here in the short term?
Yeah, I mean, you're quite right. The first concern we always have is the dollar. So the dollar has been strongly implying lower prices, but we've sort of rationalized that because historically the US was such a huge importer and a much smaller producer of oil and gas. But now we're really a net exporter. So we sort of put the dollar to one side. The second problem, as you know, is that we ran out of refining capacity. And of course, refining capacity is the primary demand for crude oil. And then at the same time, as you mentioned, Russia kept supplying oil, in fact, supplied more crude oil post-Ukraine invasion than before, believe it or not. And the final thing, which, of course, you didn't mention, but I'm sure you're fully aware, is, of course, the SPR, the Strategic Petroleum Reserve, is being released at a rate of 1 million barrels a day, which is an awful lot of oil. And, of course, that's added to the pressure. When we add it all up, we were looking for 110 to 150 Brent through summer. We've obviously broken the downside by breaking 100 today. I think we still think that the back half of the year will be very bullish, especially when the Strategic Petroleum Reserve stops being pulled down, which will be in October, right when we go into winter, when we can easily see a major energy crisis, particularly in Europe.
And so you're talking about a bullish forecast going forward. Of course, you're talking mainly here about the commodity, but you also are looking at some equity plays that we could potentially benefit from as investors. Can you go through how your theories play out through that based on the commodity itself, and then what ends up happening to the players in the industry?
Yeah, we got a little bit hung on our own argument. We had argued from 2020 onwards that inflation would be, if the Fed wanted inflation, it would get oil inflation, and that would be bullish for the oils. If you look at the collapse in the oil sector, it actually coincides exactly with what could be the peak inflation print, which would be around June the 8th. And ever since they collapsed, I think what shocked us is that some of these companies have very big buybacks, and it really hasn't made any difference. I mean, a huge buyback company like Marathon Oil has just got destroyed with everything else. The other theme that we've been on is to buy the bottlenecks. So we like refining. Refining margins are still around $50 a barrel, which is absolute all-time historic highs. And yet that group has also got absolutely whacked. And finally, Exxon had outrageously positive profit guidance for Q2, and it got whacked. So everything has been whacked. But broadly speaking, we like refining, we like the LNG gas plays, and we're sticking with this trade because we think the long-term mega themes all remain in place.
So Paul, it's Dom. As you look at the structure of the futures market for oil right now, there was a case made that there was a so-called carry trade for crude oil. Prices in the future are less than they are currently right now for the spot market. If you have that kind of a scenario, do you feel as though there's still a constructive reason to just buy crude and hold it for some of that carry? And what does that tell you about kind of where we are for crude prices, say 6, 9, 12 months down the line?
Yeah, I agree. And I think what people also forget is that the futures price for crude is nominal. That is to say, it's not inflation adjusted. So to me, there's almost a double carry. And so I think if I'm talking about the SPR release ending in October and a very tough winter ahead for Europe, I think, yeah, if you were buying, say, for example, December, January crude and holding it, that would be a good trade. And I genuinely think there's real value in the big oils as well. I think that these things will come back strongly, basically because we've proved that oil demand is not going away. Notwithstanding what you were mentioning about EVs and electric vehicles, that's going to be a 10 to 15-year trade. But in the meantime, I think we're fundamentally short oil supply, and that's a major issue. And, as long as demand holds up, I think 100 is about the right price to discount in these stocks. They're probably discounting 60 to 70 right now.